Hey guys, great morning to you. Happy Friday. It is the best day of your life today. I want to talk a little bit about, I wanted to do this for a while. Buying property subject to, I've talked about it here and there. Um, but I bought last month something subject to. My favorite student found something and is buying it subject to. And there's a lot of some people never heard of it. And if you never heard of it, let me tell you what that is. That's basically you buy a property from a seller, you get the deed. So basically, you go to a closing and the title goes in your name, but their mortgage that they got when they bought it doesn't get paid off, and you just start taking over those payments. So basically, where it's great is there's a lot of loans that were from like 2019 to 2023 that the interest rates are like half or less than half of what, they are today. And just to give you an example, sometimes it doesn't the one I did in Cleveland, I'm going to show you the HUD, and seeing it with a HUD will make it hit home for you. I'm going to show you that. The interest rate's like around what the market is right now. It's not a great interest rate, but it's like, hey, it's already got a mortgage. I don't need to get approved for the mortgage. I don't need to get financing. It's already done. I just take it over. Um, my student, I'm going to show you one that he's did in Oregon. This interest rate's like 3.5%. And then I saw one that in Hawaii that he's also doing at 2.75%. And while I was in Cleveland last week, one of the lenders there said, "Hey, I got one at." I was like, "Hey, I've never seen well, I haven't seen. I don't want to say never. I haven't seen mortgages at 2.75% that you can buy subject to." He goes, "I got one at 2.5% in San Diego." I was like, "No way. Let me see it." So there are deals out there subject to, meaning you can buy the property, you get the deed, the debt's not in your name. The debt's in somebody else's name. It's not on your credit report. And, people will go into like, why would the seller do that? Look, these are motivated sellers. A lot of times you're not getting a deal. If you want to buy a property 60 cents on the dollar, you can buy it subject to, but you're going to have to give these people some money. A lot of times you can get a deal subject to because, people owe closer to what the property is worth, or are at the same, like for instance, there was, let's say you're buying something for $500,000 that's worth 500,000, but the mortgage is at 3.5%. You can go to this seller and say, "Hey, I'll just take over your mortgage." Now, did you get a great deal going in? No, but your monthly payment is half of what it would have been if you went and bought that property. It's half of if you bought that property for $425,000. The value is the mortgage payment. So I think I'll make a little different daily nuggets and different talks about the benefits of doing this. There are negatives to it. The negative is you're not going to use the BRRRR method. So meaning you're not gonna go and refinance the property and get your money back because it's in somebody else's name. You refinance it, you're going to put the mortgage in your own name, and you're going to get today's interest rates, not the interest rate that you got. So once you do one of these deals and you put some money down out of your pocket, that money's in the deal, but these are great deals. So let me just show you a couple HUDs as an example. Since I mentioned the BRRRR method, I just want to mention that I'm doing a webinar on Tuesday about the BRRRR method in Cleveland. So if you're interested in that, send me a DM on Instagram. I'll put a link in here to the Zoom as well, to the webinar. But let me show you a couple HUDs here. I'm going to share my screen. Okay. So I'll start with the one that I did here. So this is a property in Cleveland that I bought last month. And if you're familiar with HUDs, here's the sales price. Now, I got this from a wholesaler, so there's an assignment fee, which is right here, $6,000. So basically, I'm buying it for $50,000. Closing costs in Ohio are nothing, like, $2,000. Sometimes they're less than that. Let's see, credit for first mortgage payment. I think I made a payment. Oh no, I made the first mortgage payment here, so the mortgage payment's here. Total thing I'm buying it for is 52,000. Now, the mortgage I'm assuming is 37,000. So I came out of pocket $14,000 on a basically $50,000 property. It was already rented. That's why I like this. I'm like, hey, I put 15. What are you going to do with $15,000? It's already rented. I bought the property. Mortgage is in somebody else's name. It's a killer deal. killer deal. And the property is probably worth this, I also get good, this property is probably worth 70, 75,000. I mean, but look at these prices too. If you people haven't bought in Cleveland, look at the prices in Cleveland. Like this house is rented for $900. So if you're interested in Cleveland, check out the link to the webinar on Tuesday. Now, this is one that my student did in Oregon. And look, sales price of the property is $419,000 plus he paid an assignment fee to somebody for $11,000. So basically he's paying $430,000. I think this property is probably worth $410,000. I think, and I explained to him, you're paying over, but he really wanted to buy here. It's a beautiful house, like brand new, heated floors, like not just heated floors in the bathroom, but like in the house. Super nice. But anyway, 419, he put a $5,000 deposit. He's taking over $406,000 loan at like 3.5%. So it's super low. The property will cash flow just a little, but you're buying an asset with very little money. Like you're buying a $400,000 asset with 23,000 plus the 5,000 with $28,000 out of pocket. Where can you buy at 400,000? What if you could move into this house? I mean, this is a nice homeowner area. Like you can buy you can buy this way for you to live in a house too. It doesn't have to be an investment property. Like if you want to move into a certain neighborhood, you can actually pay more money for a house than somebody else if you have a mortgage that's half the price. So for instance, well, let me finish this. So basically, he bought a 410,000. I think it's worth 410. So he overpaid a little bit, but he's 23,000 out of pocket. So let me talk about this idea for homeowners. So let's say you want to buy an $800,000 house and you want to live in it. And today's rates, let me see if I got today's rates are, if you're good, 6.5. Let me see if I could do this here. So 6.5, I got to download that. Let me figure out what a mortgage is for that. Hold on a sec. Bank rate. I'm just going to do a loan amortization here. So let's say you were going to get an $800,000 mortgage. We won't get into like your down payment, and it's at 6.5% interest, right? So today you want to buy this house and you can somehow 100% financing. So your principal and interest payments will be $5,057. $5,057. Now, let's say they want $800,000 for that house. Well, let's say somebody else is selling their house, but you can take over. Now, they don't advertise this. You have to ask. You have to ask, hey, I'll make an offer, but I want to buy the property subject to. So like in the market now, especially like higher end houses, people are not getting 100% of their ask. So maybe that 800,000 you would negotiate, you get 780 or 775, or maybe even 750. Let's say that. Let's say we're going to get 750. Maybe I come in there and say, hey, listen, I'll give you full ask, but I want to take over your mortgage. And their mortgage is at 3.5%. So their mortgage at 3.5% is 35.92. So you're saving $1,500 a month, and save $1,500 a month times, let's say that mortgage is 5 years old, and 1,500 a month. So how many months is that? Sorry, 25 years times 12 months. Just to show you, 300 months times 1,500 months. You're going to save four. So, okay, maybe you pay them full ask. Maybe you pay them a better price. Maybe you pay 70. But let's say you pay full ask, and if you were going to buy it regular, you would have been able to negotiate it to 750. So you overpaid $50,000. Well, this is how much you save in mortgage payments in 25 years, $450,000. The mortgage is the asset. I mean, obviously the house is the asset, but the thing that you're really buying here is the mortgage. And that's the beauty of this subject to. So I'm going to do some more daily nuggets about these subject twos in details, like how you find them, how can you figure out what their interest rates are? How can you, are there people that market to sell those? If you're interested in subject twos, I can help you find them too. Just drop me a message on my DMs and Instagram. I'm going to put a link again to the Cleveland BRRRR method, which is a different method than this, but I wanted to talk about the subject twos and show you guys how you can make it happen. I hope that helps you guys, and have the best day of your life, the best Friday of your life. Thanks, guys.